All right, we're back with the weekly vlog of starting a new brand and taking it to $1 million in under 12 months. But I do want to apologize for the lack of videos over the last couple weeks. I have been crazy busy with a bunch of different brand stuff, going on trips that I committed to a long time ago, but enough about me. Anyway, let's get into the video. I'm going to be showing you all the financials and exactly what to look for when choosing a product, understanding unit economics. This is quite honestly the most important thing about running an e-com brand. If you don't understand your numbers and you jump into a product that doesn't make any sense financially between your target ROAS, your CPA, and everything, you're screwed. You're done. You're so done for it. So just make sure to follow along, subscribe to our channel, and learn a little bit more about e-com. And if you have any questions, go to the comments and join our community as well. All right, so in this section, we're going to be going over our business financials. All the business financials, looking at the numbers behind your brand to make sure that it works and makes sense. So if you don't have this right, you're going to really climb an uphill battle because you're going to be going up against super high ROAS targets and you're not going to have a profitable business. So if you cover this is one of the most important parts of the entire course. So do not skip this video because this is going to be the most important part about having a profitable business that is actually feasible. So first off, let's go through like what the perfect product really is. So a perfect product has high margins, which is about over 70%. So what that means is your product has to be, 70% or higher with the calculation here. So what that is your total sale price divided by your gross profit gives you your percentage gross margin. So all you have to do is once you have this sheet here, go in here, type in all your product costs, and then it'll spit out your percentage gross margin. And so if it's over 70%, then what you do is you click yes. Okay. And now you've got to make sure that it's a non-seasonal product. So if it is a seasonal product, what's going to happen is you're going to have low seasons and you're going to be climbing an uphill battle again. So what it looks like is, for example, we go to Google Trends to check this, and let's use a seasonal product like sunglasses, which is the business I'm in currently. So you can see over the last 5 years, you can see the trend line, which looks like this. That means it's a seasonal product. You have spikes and troughs. Spike, trough, spike, trough. So you want something that looks more like this. And for example, if we type in beef tallow, you'll see that beef tallow is a much smaller market, but let's remove this real quick. And you'll see that it doesn't have any troughs. It's just continually growing. Let's also remove that and do another search term. We can do supplements. And you can see there's no real trough in supplements. So it's just continually growing, no spikes and troughs. Then you type in sunglasses. And you can see the clear difference. So you want to find something that looks like the blue line, not the red line. So for your product, let's just say it's not a seasonal product. So non-seasonal product, yes. Is the product sticky, high lifetime value? Okay, let's look at a supplement business. If you're buying a supplement that is a recurring purchase because you finish your bottle and you need to continue to use it, that is a sticky business. Sunglasses, on the other hand, you buy once and you don't buy it for maybe a year if it's a high quality pair of sunglasses. So will your customer purchase your product 3+ times in 1 year? Let's say it's a supplement, it's a skincare of some sort. Then yes, that's a sticky business. Does it solve an insecurity? Let's say it's an acne cream, for example. So if you have, acne on your face and, you're not getting attention from people because you have acne, it's, solving an insecurity that you have. That is a big selling point for selling a product online because it creates action and creates conversions. So let's say, acne cream. Yes. More than 5 different sales angles and messaging. Let's use the acne cream example again. So let's say, you have oily skin. Yes, it solves oily skin. Acne cream. Yes, it solves acne. Red spots. Yes, it solves red spots. It's all natural. Yes, all natural. Made in the USA. Again, those are all unique selling propositions that your brand has. And if you can stack more than 5 of those, then you have a good product. And that really just comes down to your ability to sell. So, yes, and then large total addressable market. Do people already know what this product is? And are there competitors out there already in the market? Because the last thing you want to do is have to educate a market about a brand new revolutionary product. Because if it's a brand new product, 9 times out of 10, you're going to have to spend so much money educating a market on what it is that you're not going to have enough money and you're going to fail. So, what you need to do is find a product that's already in a market that is considered saturated, but you can find your little gap within the market. And so you want to sell in a market like this because there's already a lot of education. And then what your job is to jump into that market and create unique selling propositions that make you stand out. And then eventually you start scaling your brand up. So yes. And if you mark all 6 boxes, then you have a product that you can start investing in and taking to market. But if you don't have that, and let's say this one is your product sticky, no, keep searching, keep looking for a product that is sticky, because you're going to have a hard time, acquiring customers for a new customer every single time if you don't have a sticky product. So now let's just close your eyes and click one again. Top one, if your margins aren't over 70%, your cost per acquisition is going to have to be so low and your ROAS target is going to have to be so high to be profitable that it's going to be hard to scale again. So make sure that all of these say yes, and you're not lying to yourself, and they truly are a perfect product and they hit these criterias. And now let's jump into here. So let's just say you're making an acne cream for, skincare, and you're solving that issue because that is a good product. Solving a clear insecurity that people have. They want clear skin. You can charge a high price for it. It relatively doesn't cost that much. There is high competition, but that's where you just need to be unique with your sales approach. And so, all right. So let's say you pay $10 for the product, or even 8. Let's just say 8, because I know this industry to a decent degree. You can make your packaging, your little shipping box for $1, your add-ons 50 cents, and your 3PL pick pack fees $2. Even if you're going to be shipping for yourself, just make sure to do that, because as you scale, you're eventually going to want to get to that point. And then usually skincare products are pretty small, so you can charge $6. Now, let's say, your selling price is $59.99, and that is just over 70%. So you can charge that. And a $59 product for something that's going to solve an insecurity, it's also going to have high perceived value with nicer packaging. You always want to be the luxury one in your market, so you can charge a higher price. Don't ever get into being the lowest price product, because it's just a race to the bottom. So always try to figure out, how can you increase the packaging quality? How can you increase the ingredients quality? Make it in the USA, but just make sure that you hit these criteria right here, and you're going to have a successful business. So once you get in here, this is your first SKU. You can have multiple products, and this whole sheet will speak to one another. And then you get into your break even ROAS calculator right here. So this pulled all the information from that past sheet. And so your gross profit's $42, 70.83. Your break-even ROAS is 1.41. So without having any employees or anything, you can hit a 1.41 ROAS to break even and invest into more inventory to scale up. So if you want to hit a 30% net target profit, that would be $18 per order. Then you need to have a target ROAS of 2.45. And when, for example, if you spend $1, you need to be making $1.45 in profit on each dollar that you spend. So for every dollar you spend, you need to be making $2.45 to make 30% net. And so from here, this is just a really clear business calculator tool that allows you to be able to see exactly how feasible your product is. For the most part, a realistic ROAS is around a 2x. When you get above 3 to 4x plus, it is extremely hard to achieve unless you have a really high lifetime value with a sticky business that has recurring revenue. So if you do have subscription based models and you're spending 100,000 on ads per month, but you have $300,000 in recurring revenue coming in, that's an automatic 3x ROAS right there. But it's hard to get to that point. So a realistic ROAS is around a 2x, 2 to 3. You can hit that pretty consistently if you have the right creative. But your goal is to have the lowest target ROAS possible. So you can kind of look at this and play around. And if $59.99 is your base, but let's say you increase your perceived value and you really just hit it out of the park with your ingredient list, your made in America, all your unique selling propositions, your packaging, the elevation of the brand, and you're able to sell it for $69.99. You look at your break even ROAS and it goes down to a 2.22 from a 2.45. So it becomes more of a realistic sell, and you can sell it even easier at a 2.2. But let's go back to the $59.99 example, and 2.45 is kind of where your target ROAS is. The higher the margins, the better. It'll allow you to spend more to acquire a customer, because at the end of the day, if you look at it here, your target CPA is $24.50. So for every purchase that you get, you're spending $25 to acquire one sale. So if you can do that at scale and you can be spending $250 a day, then that's 10 orders, profitable orders too. With lower margin products, you have to have a higher ROAS to be profitable, or you have to have a higher lifetime value. So you have to have a sticky business with, let's say a 30% recurring subscription take rate. And if you have low margin business, you must have a high lifetime value. So this is a really, really important sheet to have when you're starting your business, to make sure it's a feasible business. So you'll see this at the bottom of the video linked out. What you'll need to do is just go here, make a copy. And once you make your copy, you can name it however you want, but this one's going to be view only. So go here, make a copy, and then input all of your own business information in there. And you can see how this would work for you. So let me just reset this sheet so everyone can have it clean. There we go. And then if you get into the monthly and yearly goals, you can see here, if you start spending $200 a day on ads, you're looking at spending around $6,200 per month, and then $15,000 in revenue. That's $490 per day in revenue. And as you scale up, it really comes down to how well you can scale your ad accounts and your organics side of the business. But if you see here, by the end of the year, you're going to be spending $1,000 in November, which is Black Friday and the most busy, time of the year. You'll be doing $2,500 in sales per day and $75,000 a month. So this is not unrealistic, because, as you scale the brand and you're hitting profitable ROAS, all you have to do is turn up the lever a little bit each day and continue to make really high quality creative that converts. We'll get into that in more detail in another section when it comes to creative that converts. But at the end of the day, this is a general outline of what you can see a brand scale like in 1 year. So, let's see. So, averages throughout the whole year is going to be 575 ad spend per month. And then let's see. Yeah, so $500,000 business in 12 months, not bad if you can hit these numbers. And these are extremely realistic. This one right here is pretty much like you have your accountant. If you're doing all your accounting, this is going to be your holy grail of like manually entering everything in to just get an idea of what your finances look like. This is all in the sheet as well. This will be, kind of a general outline, but what you need to do is just make sure don't touch any of these yellow ones, because these are formulas. Everything you're touching is the green. And then this will spit out your, expenses each month. So it starts up here. Your total income is going to be 15,000 after fees and returns. Your ROAS profit is how much you spent on ads, and the profit after 1 ROAS. So, to break even is a 1, and then anything above a 1 is what your profitability is, and that's your ROAS profit right here. That's all calculated into. And then you can see your top line gross profit, and that's your net, and that includes your cost of goods, and then all your team expenses. And if you're doing all this yourself, you're not going to have any expenses, so you can actually bring that to a 0. Let's bring this to 0. Photography, models, creative agency. Let's say you don't need that. You're doing your own accounting. And just mess around with all these numbers, because the lower these numbers are is obviously where you're going to find your profitability, until you're making enough profit to reinvest into the business, to hire people who do all these things better than you, so your profit can go up. But we'll get into that when we get to the scaling section. Softwares and apps, that's like Shopify, the apps you're using inside of your theme and everything like that. Research and development, this is usually like, finding your product and talking to manufacturers and getting samples. It's going to be around $1,000 before your cost of goods. Continuing education, just learning as you're going. Learning from me, those things are super important. Shipping and freight, that's going to be getting your product to the US, and to either your house or your 3PL. And so you can see at the end of the month, total expenses, your total income, total expenses. Net income is not $1,000 for your first month. And then as you scale up, you can see your net and how much income you're going to be making. And then eventually, by the end of the year, you're looking at around 18,000 and a total profit of $100,000 in 12 months in your first year of business, if everything goes as planned. And this can be much higher or it could be much lower, but it depends how well you're able to, consolidate your expenses and also scale the brand with your Facebook ads and keeping things in stock with inventory. And if you have any questions with any of those things, feel free to reach out and I will help you out. But that is pretty much everything you need to know about the finances in the background of your e-commerce business. So this is the perfect product checklist, your product margin calculator, break even ROAS calculator spits out exactly the number you need to be targeting, your monthly and yearly goals, just how much you're going to be spending per day and per month to hit your revenue goals. And then your accounting profit and loss statement per month gives you the clear picture of how much money you're making and where your expenses are going, so you can cut back on things that aren't needed in the future. So I hope this section was really beneficial for you. And if you have any questions, feel free to reach out to me and I'll help you guys out. All right. Take care.